You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to Watching the Financial Survival Network. I'm Kerry Lutz. Well, we're almost at the end of October. Really not many days left to go. And the gold has been lagging, to say the least, although today on the 26th of October, it did show a little bit of life, as it has periodically, up $12, a little less than 1%, silver up a little bit more than 1%, but we want to get the right perspective on what's going on. So we want to get the right gold forecast. So we got our good friend Gary Wagner on with us. And Gary, it's great to have you back. So what is going on here? Is it Elliott wave? Is it a liquidity event? What are we encountering now?
Well, first of all, thanks very much for having me. We're looking at an interesting scenario. As you mentioned, for example, gold is up about $11, $12 today. But when you look at the components, it's actually not only all dollar strength, but when you look at physical gold through, say, the Kitco Gold Index, you can see there was selling pressure in the market. Actually, if you took away the dollar from the equation, gold was down about $5. But dollar weakness today actually brought gold up $17, or the differential between the two. Yesterday was the same, in which we had the dollar weakness being the preemptive force moving gold pricing. Now, what that means is that sellers are in the market, which tells me that they are not convinced as to that the Fed will take the pace at which they're having their rate hikes and begin to reduce it or put it on pause. Right now, they're anticipating about a 90% certainty that in November, the Fed will raise rates by 75 basis points. However, what's really been changing are the December numbers. And I get these from the Fed Watch tool. The CME puts it out, and it's based on who's buying the Fed futures and where they're taking them. They're really split between 0.25%, 0.5%, and 75 basis points almost across the board. The highest probability is 46%, and that is for a 50 basis point rate hike in December. But the key is going to be two reports that are coming out this week. On Thursday, we have a third quarter GDP and, more importantly, national debt, and I want to touch on that in a second. The second report is Friday, and that's core inflation numbers, because my fear is that the Federal Reserve has been aggressively raising rates. Look, they started at about 0. They've raised them at every FOMC meeting since March. And so the question becomes, how much has it impacted inflation? We'll get an idea on Thursday of how much has contracted the GDP. Look, the housing market is falling out of bed because you could get a mortgage of good credit for about 3% prior to the initiation of rate hikes. Now, if you've got excellent credit, a 30-year mortgage is going to cost you about 7%. And the difference between getting something at 3% and 7%, like a mortgage, is going to price a tremendous majority of people out of the ability to purchase homes. And that's why we've seen new home sales plummet. Simply put, even people with good credit can't get qualified for the house that they want. And so that's really important. Then on Friday, we'll have the PCE report, core inflation. And if that stays persistently high, as I believe it certainly could, the Fed's kind of in a dilemma. They know if they continue to raise rates more aggressively than they have been, it could easily move us into a recession. I believe we're already in a recession, because if the definition of a recession is 2 consecutive quarters of reduced GDP, that's a recession. Well, we've already had 2 reduced quarters. And so this third quarter GDP is really going to be key, because if we see a continued contraction, which you would expect because the Federal Reserve has been raising rates, Companies can't borrow money. They can't expand in the same way that they were during the last year prior to the rate hikes. And to me, the root cause of inflation is that the Federal Reserve did not act in 2021 and start with mild rate hikes.
Mm-hmm. Yeah, they could have just been doing 25 basis points every other month, and we'd be where we are now. We wouldn't have an inverted yield curve. We might have a flattened yield curve, but probably not inverted. And so now they're playing catch up. So look, were those polls taken? The odds of them raising how much were they taken before last night's candidate debates or after? That's what I want to know.
The numbers I looked at are as of today. Mm-hmm. One key difference, because I didn't realize, I didn't put that correlation together, is that the probability of a 75% rate hike yesterday was 97%. Today it's 86%. Mm-hmm. For whatever it's worth. Something had an effect that took the kind of certainty that they'd raise by 75 basis points down a little bit, about 10% in terms of probability.
Mm. Well, hey, we know they're going to raise, right?
Right.
The question is, will this be the last one, or are they going to taper off, not to use a pun, but are they going to taper the raises? We go down to 50 and then 25. Are we near the end? Because are they going to push the 30-year mortgage up to 10%, Gary? Are they going to do that?
Well, they've already been on record as saying that they anticipate taking Fed funds rate, which of course is what prime is based off of. You add 3 points to that, and that gives you a mortgage rate to between 4 and 5%. And the question is whether or not they will do that by the end of this year or March, because they're certainly going to take a pause after the December rate hike, whatever it is, and get a reading to see if they're really affecting inflation in a meaningful way. Because my sense is that there's a persistence, a stickiness, and that's what they didn't anticipate before. The reason they didn't raise rates in 2021 is they said, oh, it's temporary, it's going to kind of subside by itself. Mm-hmm. And it didn't. And so if you look at the inflation rate in 2021, it came in at about 1.4%. Now realize their target is 2%, so well below their target. But by March, it already started rising to 3, then 4, then 5. And by the third quarter was already out of control at 6, and yet they did nothing. Had they, as you said, had 0.25% rate hikes every other meeting, or such when it was really low at around 4%, we wouldn't be looking at inflation having risen to 9.5%, now 8%.
And look, Kerry, real estate was booming. There was no need to be buying mortgage-backed securities. They could have been cutting that back as well. And it would have, well, I don't know. I'm not saying that it would have stopped inflation or slowed it down more than it already has. But it wouldn't be this shock to the markets and everything else. Now, when you see gold take hits like it does, always on options expiration, mind you, the last 3 out of 4, there's been major declines in gold. You got to wonder, is there a liquidation event taking place somewhere in the system? Is the system getting shocked?
Well, in terms of having a major move coming in at expiration date, the COT, Commitment of Traders report, came out, that comes out every Friday. It showed that money managers are net short gold and net long silver. Mm-hmm. And so a lot of their tools that they use are options. If they're short, they're not only short futures contracts, but also they've got gold puts. In other words, you're betting it goes down. So if it's working in their favor, they're going to pull profits before expiration date.
Right. So interesting phenomena taking place. So what of gold? What of silver? What can we look forward to here, Gary?
Well, here's what I'm finding interesting. Gold as a safe haven play has kind of muted itself, and it's really been dollar strength or weakness. As yields rise, the dollar rises. When the dollar rises, that has 100% negative correlation to gold. It takes it lower. But when you have geopolitical potential geopolitical events challenging global safety, such as North Korea readying themselves to launch a nuclear test, okay? And then you've got Putin, on the other hand, using a false flag scenario in which he's claiming that Ukraine is about to launch a dirty bomb. He's used this tactic in the past so that he can go ahead and do something and say, this is in response to what they were going to do. That was his reason, a rationale for going into Ukraine. Well, that was Nazis too, but he makes false narratives up and then uses that to back his actions. And so there's no concrete evidence that Putin will actually do that. He said that, but whether that's just him threatening or his intention to do something horrific like that using tactical nuclear weapons, because it's kind of gotten to a point where they're not getting any headway. And at the same time, he's reacting to the fact that the West is really the ones that have facilitated Ukraine in not going down in 3 days. Alone, they wouldn't have lasted. This wouldn't be like the Israeli 7-day war. They would not have lasted the amount of time that they have without immense amount of military aid and tactical and strategic aid. And so Putin realizes he's not fighting Ukraine. He is fighting the West because Ukraine is acting as a proxy for that. And so I don't believe that Putin is sincerely all there. Is the nicest way I can put it.
Hey, that makes two of us there, right?
Okay.
Who's here for the U.S.? Nobody that I can see. And the bumper crop of candidates in there don't seem to be much better either, certainly on the current occupants party. So basically, we look today, and you mentioned today was a day where the dollar took a dive. Does that prove your thesis that this is indeed a dollar gold, reverse correlation or contrary correlation here?
Don't just survive, thrive. The Financial Survival Network.
Terra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Terra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Terra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Terra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network, the information you need to thrive now more than ever.
Well, you can look at it this way. Gold was up $12. $17 in gains were directly attributable to dollar weakness. That's how much it caused gold to fall per ounce. But then $5 of selling pressure lessened the effect of a weak dollar so that it closed up $11. We've seen that time and time again. I can remember back to before the Fed was aggressively raising interest rates, where the dollar had a third of an input or a half of the input. You had buying and selling having the greatest percentage change on a daily basis for gold. If gold was up $20, 17 of it could have been would be buyers entering the market, and $3 or $4 of it would have been dollar strength or weakness. It's not been that way because as they raise interest rates, that, of course, is going to lead naturally to higher yields. And since they're looking out at time, 3 to 6 months, especially with Fed funds futures, you're getting the dollar having these enormous moves. It went to about 114. Today, it's down to about 109. It's really been the predominant factor behind moves in gold lately. And what interests me now is that we're not seeing it act as a safe haven as much as we have in the past. And we're not seeing it react to inflationary pressures as much as we've seen in the past. It is almost reactive in the way that we've seen the Federal Reserve be reacting. It's kind of mirroring that.
All right. So, and same thing with silver, I guess. So do you think they both hit bottom? Silver certainly appears to have put in a low.
Silver's put in a low. I mean, gold's low at 1621 is a double bottom. And on a technical chart pattern called a double bottom, you look for it to form a W. And so we've hit every part but the last upper line of the W. If we get follow through, then it will have been, in fact, a double bottom. We definitely have resistance at approximately 1680. That's a big number. And then the next number above that's 1700. And so depending on the numbers that come out Thursday and Friday, in other words, if we're seeing a huge contraction in the economy, third quarter GDP, and the national debt completely swelling, that's going to be worrisome, not only for the Fed, but for whether or not we're going to enter a recession. And that, I believe, will be supportive of gold. But most importantly, on Friday, if we don't see the PCA, that actually moved up from 6.3 to 6.5% from August to September, the last numbers that came out. And so that really shook the Federal Reserve up, because here they are after aggressively raising interest rates, and what they follow, core inflation, moved up. And so it shows that they're not having the intended effect, and yet they're causing hardship in the environment by artificially contracting the economy. And that's what's really the major issues right now that we're looking at.
Gotcha. And, every time, like Mark Twain said, his history doesn't repeat itself, it rhymes. Gold is the ultimate vote of confidence or vote of non-confidence in government, right?
Right.
So maybe that's what it's going to take here.
We'll have to see. It's going to be interesting throughout the end of the year, and a very interesting 2023. I can't believe we're so close to that.
Hey, may you live in interesting times. It's been pretty damn interesting the past couple of years here, Gary. Well, hey, so I highly recommend that you think about what we just talked about, particularly with the price of gold, where it's heading. Gary, how do we subscribe to your newsletter?
You go to thegoldforecast.com, all one word. Our YouTube channel, where you can view videos at no charge, is at the Gold Forecast, youtube.com/@thegoldforecast. And my Twitter handle, you can follow me there at Gary S. Wagner.
Excellent. And hey, you got some good survival tools there behind you.
That's right.
The shove. I think if you know how to use those things, you can at the very least use them to cut pineapples and watermelons, and maybe something more useful than that. So,
well, that's why I have two large sons that can handle them much better than me.
Okay, that's good. Well, hey, we'll talk to you again. If you got a question for Gary, shoot me an email, kl@kerrylutz.com, and want to know your opinion. You think gold is going to go higher? I know, Brian, out there, you say gold is a scam, and everything in life is a scam until it isn't. They thought Bitcoin was a scam. Then they thought it wasn't. Maybe they think it will be again. I don't know the answer to it. But I know that if gold is a scam, it's the longest running scam in recorded history. So I'll go with the proven scams as far as that goes, rather than the unproven scams, which have yet to prove themselves. Hey, I want to know what you guys out there are thinking, what you're doing. Has this changed your investment thesis? Are you putting money into gold, real estate? You buying cemetery plots? There's a vibrant market in them, real shortage there. If you'd bought them up before, a couple years ago, you really could have cleaned up. There's all sorts of different ways to make money, but do it the easiest and the safest, right, Gar?
Yeah. One last thought. There's an old adage from stock traders that you buy when there's blood in the streets. In other words, gold is at its lowest price in the last 2.5 years when it hit 1621. There is really a lack of interest, and a lot of people think it's going nowhere. For those that are buying physical gold, this is probably the best opportunity you've had to add, to accumulate more than you've seen in the last 2.5 years. So the professionals buy stocks when they're cheap, not when the public is buying them. They're selling it to them, and vice versa. They're buying it from the public when the public is dumping them. So that's where that adage, buy when there's blood in the streets. With gold, there has been blood in the streets. It might be a good opportunity.
And the mining stocks too. And apropos of what you said, talked recently with the CEO of Fury Gold, and institutions are literally knocking down these viable junior miners' doors, but the juniors don't want to sell at this particular point because their stock prices are so beat up that the dilution, they'll never recover from it, and their long-suffering shareholders will pay the price. So they're holding out, and that means if you have cash, you can hold out till the thing turns around. My feeling is it's going to be sooner rather than later, but I'm not a psychic, so we'll have to see. Again, if you got a question for Gary or myself, any economic topic, money, business, whatever, shoot me an email, kl@kerrylutz.com. Don't hesitate to put comments up on the YouTube channel. We do read them. Gary, thanks so much. We'll talk to you again soon.
Thank you for having me. I'll talk to you soon.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.